Hey, everybody, welcome back to StocktwitsTV. We are staring down the barrel, or we were staring down the barrel this week of the software slump of 2026. I think that's what we can call it. Megan King, as always, is here to break down the carnage in the streets. But Megan, before I get to you, with chip stocks on the decline, little bit of a bounce back the next day, SaaS absolutely in the gutter. Jensen Huang is one person, and I think we should listen to him. Jensen Huang is one person who does think the software sell-off was simply overdone.
There's this notion that the software industry is in decline and will be replaced by AI. You could tell because there's a whole bunch of software companies whose stock prices are under a lot of pressure because somehow AI is going to replace them. It is the most illogical thing in the world, and time will prove itself.
All right, Megan, so you heard it from Jensen himself. You look at the heat maps, and it doesn't look like people are buying what he's selling, so to speak. A sea of red this week for the big software giants, Microsoft, Salesforce, Adobe, everybody just getting hammered here. Do you think that on any level this is a fundamental collapse, or do you agree with Jensen that this is just overdone and we're due for a correction?
I agree with Jensen. I think the current drawdown in legacy software is more about uncertain unit economics in this kind of AI first workforce. Investors are extrapolating a future where autonomous agents compress SaaS seat counts. And so we're seeing that play out in the markets. But I fully agree and believe that AI does not eliminate software. It simply rebundles it. Agents need systems of record. They need permissioning layers. They need compliance logic, workflow, orchestration. And I think the value just kind of migrates and shifts from this per seat structure that we're used to, this like per seat UI access layer in pricing, to a more embedded intelligence plus control layer.
Yeah, I mean, his point is that you just don't delete something like SAP or Microsoft overnight. Like, there are fundamentals to this business. You do need software companies, full stop. Do you think that we've found a bottom here? I mean, where do we find a bottom for these software stocks?
I don't know. I think that we will continue to see pressure through Q1. I think investors are going to wait to see a more clean quarter, a more stable core revenue, modest seat compression, and AI revenue that's more incremental and margin neutral. But I don't think these valuations are going to stabilize on that narrative alone, and that we're going to need to see some evidence for this AI monetization. And that is more than just margin dilution. I believe the inflection point is going to be a significant change of tone from management and analysts, combined with, us seeing these real world revenue number playouts. But I believe that the opportunity is there in these companies. I don't think we've necessarily seen the bottom. What's happening with this value compression driven by all of this uncertainty. These incumbents, Microsoft, SAP, like you mentioned, are uniquely positioned to internalize this AI value because they control the distribution and the data layer. And historically, these moments when an incumbent platform is discounted due to perceived disruption or a new model, patient capital has been rewarded once the revenue model adapts.
Yeah, that's a good point. Right. If you're someone that trades, day to day or week to week, this is a sector that you might want to stay away from. But if your time horizon is a little bit longer, if you're talking about years, and I'm not talking about a decade, say 1, 2, 3 years, this could represent a really good buying opportunity.
Yeah, I agree. That's definitely how I see it.
All right, let's move on to the big game. I don't know if you guys call it over that in England. The big game.
Yeah, there's new excitement about the Super Bowl. Pubs are hosting parties, and selling Bud Light and such ahead of the
Oh,
game.
that's great. So, well, you're making Roger Goodell very happy right now. He's the commissioner of the National Football League that invested in those London games for years and
Yeah.
years and years, and I guess it's having a little bit of ROI if you're excited about the Super Bowl. But let's talk about the investor play here, because the NFL officially banning prediction markets like Kalshi and Polymarket from advertising during the Super Bowl. Meantime, as we all know, as American sports fans, DraftKings and FanDuel, you cannot turn on a game without seeing it all over the airwaves. Is this about, what's your quick take on the NFL with prediction markets, I think, poised for a real breakout year? What is your take on the league coming down on prediction markets the way they have?
Yeah, it's a really interesting move. I mean, I think it legitimizes the industry of prediction markets as a real threat to
Yeah.
traditional gambling models. I think this decision is much less about ethics of any sort and is just more about economics. As we know, the Super Bowl is the most valuable advertising real estate in American sports. And the fact that this access is being reserved for the incumbents whose business models are very tightly linked to the revenue of the league is very telling. Prediction markets, I believe, are estimated to account for 5% roughly, right, of traditional sportsbook handle, which sounds small until you consider who it is that's shifting away from traditional sports. I think it's less your casual sports gambler who's getting a notification on their phone that they have a free bet on the game if they do it the next hour kind of thing. And it's the more analytical and price sensitive bettor or gambler who is migrating towards what feels like a more efficient market. And that cohort disproportionately drives liquidity and long-term engagement. I think also once that flywheel moves away from this traditional sportsbook ecosystem, it's going to be difficult to reverse that and bring them back.
Interesting.
As gamblers, I feel, become more financially literate, and increasingly start to view this wagering on the outcome of things as a form of gambling, the sportsbook model begins to look quite outdated. Traditional sportsbook monetize through a structurally high take rate, whereas prediction markets function more like a traditional exchange with lower fees, tighter pricing and such. And I think the NFL is obviously going to frame this decision as maintaining the integrity of the game, and but the incentives there are clear, and prediction markets threaten the league's largest betting sponsors by reframing sports outcomes as a tradable asset, and banning their ads is a classic incumbent defense move.
Yeah, yeah. And, it's interesting what you said about some of these sports bettors becoming more financially literate. Sometimes it's because of the platform that they use. Robinhood is a place where you can buy a stock and also make a bet on Monday Night Football, for instance.
Yeah, exactly. And it really legitimizes prediction markets, for better or for worse, in terms of a gambling ecosystem. And I think, sportsbooks aren't over, obviously, and economically, but culturally, they seem to be transitioning towards being the old school traditional way to bet, and that the younger, more finance savvy users are increasingly preferring the market-like platforms and the market platforms, like you said, like Robinhood, over a more casino-style experience.
Yeah, you know what? If you look at the charts for DraftKings or the FanDuel parent company, Flutter, certainly investors seem to believe that the predictive markets are cannibalizing the businesses of those two sports books. What do you think would you be a buyer of either of those names at these levels? Or do you think that, or perhaps do we see an opportunity for perhaps some M&A in this sector? I mean, it seems like it would make sense if you are being threatened by another business for a DraftKings maybe to go out and acquire one of these platforms. So a little bit of a double-barreled question there. You know, do you think that DraftKings and Flutter are being meaningfully impacted by the threat that predictive markets represents? And then if so, is there an opportunity for an acquisition?
Yeah, I think the banning of prediction market ads by the NFL has made it meaningful, even if it wasn't beforehand. I mean, I believe it was beforehand, but even if it wasn't, the fact that the NFL has taken such a clear statement really shows that they do view it as a threat. And I think, a real threat to their business model. I think that DraftKings or FanDuel will eventually acquire one of the large prediction markets, Kalshi or Polymarket, though, well, that or they'll create one themselves.
Mm.
I think either way, they aren't going to beat this model and that they're going to have to adopt it or attempt to own it in some way, to hedge against this demographic and structural shift in gambling.
I'm afraid to ask you, who do you like in the game? Because I don't know if you're following football that way, but let's just, between Seattle and New England, which one would you, if you were putting a bet on the predictive market in a purely hypothetical sense?
I'm most excited to see Bad Bunny.
Great question. You know what? We'll end it there.
Yeah, that's my answer. I'm most excited
that's great. That's great. Coming off a lot of Grammy wins. Thank you so much, Megan King, as always. And you can catch Megan on the Economic Muse on your socials.
Thanks for having me.